Welcome to Keep What You Earn, your judgment and jargon-free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money and taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well, then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. So I've used this analogy before, but I can never use it enough. And that is around what I call the business macros. And I'm going to explain it really quickly for anyone who hasn't heard the episodes where I've talked about this. But we typically bucket most of our clients' expenses when we look at their profit and loss statement. We bucket their costs into three core categories, which is acquisition, fulfillment, and operations. So the reason we do this is because we believe every expense a business has falls into one of these three categories. In addition, we'll say month or every quarter, typically every quarter, our business owners tend to major in one of these categories. And by that, I mean they're focusing on acquisition right now, they're focusing on fulfillment, or they're focusing on their operations and systems. And I think that it's a healthy approach to pick one of these things and really go in on it one at a time and apply focus. And coincidentally, I did not really plan this whole framework in my mind, but coincidentally, these three things also really do align to the concept of macronutrients. Now, if you don't know, I come from a fitness background. I have AFA and ACE certifications. I've taught multiple modalities. I was in fitness for 10 years. And Financial Solutions was the original name of the company, and we served fit pros. It's so funny how these concepts really do translate across both disciplines. But if you've ever had to track your macros, right, from a diet perspective or weight management, you'll understand that these are three different sources your body has for fuel, essentially. Yes, I'm aware that protein isn't a fuel. Bear with me. You've got carbohydrates, fat, and protein. And what a lot of people do, what a lot of people will experience when they're given their macros, right? When you go to a nutritionist. Now, I've been on both sides of this table, essentially, like from a fitness perspective, and I've also been a customer of a professional. So I know how this kind of typically feels. You sit on the other end of the proverbial table with a professional and they say, hey, here are your target macro ranges of carbs, fats, and proteins you should have daily for your consumption. They give you kind of this rundown of how many grams of protein to eat, how many grams of carbs, and how many grams of fat. And you have this kind of ideal balance. And it will be custom based on your goals, based on your needs, ideally. Now, there's definitely some general advice out there, but they'll typically customize this based on what you need in your body. The, the key thing here, though, is that I realize this is actually really similar to what we do with our clients. And what we do is we evaluate where they should be spending their money, AKA where they should be fueling their business. So if you look at these three categories as the macronutrients of like where to spend your money, AKA where to consume your calories, what you're going to see is acquisition, fulfillment, and operations are really the three macronutrients of your business. If you invest in acquisition, then you're going to have more of a client flow coming in, more deal flow. If you invest in fulfillment, it means that you're going to have a better product. And if you invest in operations, you're going to be able to be more productive, operate efficiently, have more free time, pay yourself more, all of those things. So when you think about these different functions, what we recommend people do is we have a target range, much like your macros. We have a target range of percentages that we like to give people. Now, I'm not going to give you specific percentages on this podcast because it is very custom and it's very industry specific. So I do have an idea of per industry what to expect. And if you'd like to explore this deeper, this is something we can cover in a power session, something we can cover on CFO on demand calls. So if you'd like to meet with me on this, there's absolutely that availability to do that. Just message me on Instagram at Shannon K. Weinstein. Tell me you heard this and let's get it on the books. But if you want to go through this yourself, what I would challenge you to do is to pull up your profit and loss statement. I would say organize your costs in your QuickBooks with these three categories in mind. You can do that. Have your bookkeeper help you with that. send them this podcast. But you can organize those 3 categories, and then you can also compute a percentage to say how much of my sales, how much of what I'm bringing in, my income, is going to each of these 3 buckets. How much of the grams of what I eat are going out to protein, carbs, and fat, AKA acquisition, fulfillment, and operations. That is a great way to look at your finances, especially if you are not as savvy on the technical jargon, the financial front. If this is something new to you, this is a perfect way to introduce yourself to this concept because it's a really approachable idea when you start thinking about it as the 3 sources of fuel. 3 sources of fuel to grow a growing business. And if you approach it that way and you make decisions of how you spend your money based on this allocation, your decisions become so much more clear. I had a coach who would put me through kind of a similar idea of asking if I was concentrating in one of these different topics. And he would ask me, okay, Shannon, what are you focusing on this quarter? Acquisition, his version of acquisition, fulfillment, and operations. And I would say fulfillment. And it's like, okay, so what are you doing? Well, I'm building the SOPs and I'm enhancing the product, the deliverables, and changing the offer around a little bit, making sure all the feature sets are equal, et cetera. So that's what I was working on in that particular season. And then it would switch once the fulfillment was done. You kind of hit these seasons almost in order of fulfillment. And we went to acquisition because now that the product was honed in, now I could welcome more people into the offer. And I also had, when I was investing in fulfillment, I also hired someone to help me, which expanded our capacity to be able to welcome in more clients. And some people will invest in acquisition first and then go to fulfillment. There's no wrong way to do it. So when you look at spending decisions, I want you to think about these being the nutrients that your body slash business needs. This is about finding nutrient dense expenses. There's another example of this sort of if you ever experienced going through Weight Watchers in like the 90s, early 2000s like I did, you remember the point system. And they still have a point system, but they're under a different branding and they probably changed how they do it and definitely how they message it. But when I was in the program, you know, eons ago, the way they would do this is they would give you almost a budget of points to use per day. And then every food had a points value that you had to compute by using the protein, the fiber, the carbs, the fat, the sugars. They would give you a points value for it. And you only had a certain number of points to spend. Now, I had a friend who was in this program with me, and she had this like, it was so funny. She had this sort of approach to it where I would see her I was in high school or college, I can't remember, and I remember seeing her at lunch, and I would say, "Hey, are you gonna have anything to eat for lunch?" Because she would have an empty tray or she'd have an empty, table in front of her, and she'd say, "No, I'm saving up my points." And I'm like, "Oh, interesting." I'm just saving up my points. I was like, "Okay, what are you gonna do for food?" And she's like, "Oh, well, I really wanna have one of those giant Snickers bars out of the vending machine, but that's like," and I forget the total thing, but, like, that's like 12 points, which is like the equivalent of more than a meal. So, instead of eating nutrient dense foods, which is what the program was intended to communicate, instead of eating more nutrient dense foods, what it did was the mentality counterbalanced with, okay, so I have a budget of what to spend and I just want the Snickers bar, therefore I cannot eat anything else today. And that is the complete opposite of what will get you sustainable results when it comes to your health and fitness and your weight management. So I tell you this story to remind you that when you look at your business numbers very similarly, don't think that you have to be laser focused and that you have to say no to everything but this one thing. It's more about understanding that ideal balance and understanding the nutrient dense expenses, I call it. The ones that will pay you back, the ones that are not wasteful, the ones that will create business longevity. And when you have nutrient dense expenses, it's almost like having your sugar from a sweet potato instead of having your sugar from a chocolate chip cookie. Okay. I'm just saying that there's more value that if you're going to spend the money, AKA the calories, if you're going to spend the money, it might as well be on something that serves you. It might as well. And yes, the other stuff tastes better. I know. But when you remember this and you kind of create a similar discipline, it becomes a lot easier to master this and a lot easier to really start to be aware of where your money's going and become more aware of what's nutrient dense and what's not. I'll give you some examples. Nutrient dense expenses versus non. I had this happen recently with a client. They were essentially asking me permission, which no one ever does, by the way. If you're my client, you never have to ask me permission, but you can ask my advice. But she was basically asking permission to go to this mastermind event and saying, "Hey, Shan, I would really like to go to this thing." I said, "Okay, it's this much money. It's not really part of the plan. It's not in our forecast. So if you go to this thing, it's going to set you back, 2 weeks of cash flow. Are you okay with that?" And she said, "I don't know. Like, what do I have to think about here?" I said, "Well, here's the thing. It's going to set you back 2 weeks of cash flow. And what will you get out of it? Right. So it's going to lose you 2 weeks of business life in a sense. If your money were to run out and everything dried up, you would be done 2 weeks sooner because of this one expense, if I had to isolate it. So what is that? A, what is that worth to you? But B, what are you getting out of it that will counteract this impact? Right. So when we talk about this, we're talking about ROI. We're talking about what are you going to get out of this investment? And in this case, she said, well, this is basically a room full of my ideal client. And as long as I get one client out of it, my client lifetime value is north of $200,000. So if I spend this money, let's say it was $20,000 to get in, I will possibly make $200,000. Okay. That is really worthwhile. That is a nutrient dense expense if this is true. But what I challenged her to do was prove it's nutrient dense in a sense by having a plan of how are you going to secure a client from this thing? Like, is this a safe place where you can actually pitch yourself? Are you really connecting with these people? How will this lead to more clients? And is this more of a long game play? How long before you think you'll realize that benefit? These are all questions we have to ask ourselves when we encounter spending decisions. Like, is this going to pay me back in the short or long term? Is this going to be worthwhile? And then finally, is this a really smart idea? Probably. But is it the idea for right now? Is this a good time for me to invest in this? Or is this something where once I have more of a cash reserve built up, I can invest in it? And as we always do, I feel like I've said this for 3 years now, tumultuous and volatile economic times. I feel like as a business owner, we're constantly in this state of volatility. But if you're willing to really take a good hard look at making these simple decisions with logic and with intention, I think you'll be building longevity and you won't be tempted by the smaller opportunities or the things that pop up or the spontaneous spending that comes up because I'll tell you there is no shortage of ways for you to spend your money as a business owner. There will always be an opportunity for you to spend more money. Always. But what you're not going to find are the signals that you probably shouldn't unless you know for sure what your priorities are and you can assess that. So, as you encounter different spending decisions heading in toward the end of the year, we're kind of approaching the last couple of quarters of the year, just keep in mind that you have to be intentional and you have to make these decisions consciously, but you should be really honest with yourself on whether this is a good idea for you and your business or the right time.
One of the fastest ways that digital business owners lose cash is not having a clean tech stack. And by that, I mean individual costs for email marketing platforms, CRM, community page, course creation platform, website designers, and all these things do add up. And it can be super hard to run a profitable business using all of these different systems. That's why I love Kajabi. Kajabi is your all-in-one solution that manages your business throughout the customer journey. From lead generation to taking payment and sending onboarding emails, we use Kajabi for everything. And you can try Kajabi for 14 days free by heading to trykajabifree.com or click the link below in the show notes. Thank you so much for listening. If you enjoyed this episode, please leave a rating and review on your podcast platform. This small action goes a long way for podcasters to get our message heard by more business owners just like you. Be sure to check out the show notes for links to information about our guests and ways to get in touch with me. We'll see you on the next episode.